Hey YouTubers, Mike Martins here, Mike Martins channel. This has been sent to me a couple of times in the last day, and I didn't cover it on trends in the housing market. I had a lot to cover that last night on trends in the housing market. But this is a very important one, and what Canadians need to be aware of when the banks start cutting mortgage rates. What they want to do is they want to stimulate the ailing housing crisis we're having here in Canada. Australia has already cut rates and looking at even lower rates. So has the UK. So the banks are the banks, not the overnight lending, not the Bank of Canada. The banks. The Bank of Canada is still going to lend the money out at X amount of interest, but the banks themselves are lowering rates to attract more teaser loans, more attractive rates when the consumer is shopping around for rates. A lot of people's mortgages are coming to light and they're coming to term and they need to refinance. So what are people going to do? They're going to shop for the best rate, especially if some of them are underwater. A lot of people owe more money than what their house is worth. So they're in a negative equity position. I've been talking about this for many years. So if you're just new to my channel, go back, go to my channel, take your time and browse the videos. I've been talking about this for many years. I'm not some, Captain Obvious that just came on the scene that wants to talk about this. It's been going for a long time. I've been talking about Australia, New Zealand, the UK, especially Ireland and London, Canada and the United States, the whole west coast of the United States. And it's a big deal. Now, with banks and banks all over the English-speaking world looking to lower rates is very damaging to the economy, and we're going to look at it. There's a website I pulled up that gives a little bit of terminology and gets to the point and makes it easy for a lot of us to understand. Because a lot of these people that are underwater right now trusted their banks, trusted their mortgage brokers, trusted everybody because they think that they're doing this job and they're doing the right thing for you. And that's the problem, and that's what I'm scared of, okay? So, non-biased, I'm not picking on Royal Bank. I do bank with them, so I have a great branch here, and I have no problems. Royal Bank of Canada has become the first of the major banks to lower its posted interest rate for a 5-year fixed mortgages, a move that has been widely anticipated amid tumbling bond yields. The bank lowered its featured 5-year mortgage rate on Wednesday to 3.74% from 3.89%. Other big banks did not immediately match the rate, but mortgage expert Robert McLister, I hope I said that right, founder of mortgage rate comparison website at ratespy.com, said others will move soon. So check out this website, guys. It's a very informative website. He said that alternative lenders who compete with the big banks have already been lowering their rates for weeks, giving them a slight advantage in the market. Mr. McLister anticipates the major banks will settle their featured 5-year fixed rates and about 3.64% in the upcoming days. So people living in the United States, so you got a term and then you have an amortization. So a lot of people have a 4-year term and, let's say, a 30-year amortization. So they could renegotiate after 4 years or 5 years. The 5-year in Canada is the most popular. In the United States, they have an ARM. It's called an ARM. So they have a 6-year ARM where they would pay for 6 years, that locked-in term. Then after 6 years, it comes up for renegotiation, right? So it's the same thing. And then in Australia, they have the same thing. Everybody has the same thing because back in the day, back in the 80s, you weren't allowed to get more than a 10-year mortgage. It's like, why are you going to take 10 years to pay this down? All you're doing is paying interest, right? So a lot of people will pay their homes off in a couple of years. And the people that did pay their homes off back in the early 80s were packing grocery bags and did menial jobs and owned their homes and had a place they could call home and have kids and raise a family. He said alternative lenders who compete with the big banks have already been lowering rates for weeks, giving them a slight advantage over the market. Okay, let's keep going. He said that some big banks have already lowered international discretionary rates on 5-year fixed terms for preferred clients, but RBC is the first bank to lower its publicly posted rates since August last year. The move comes as yield on 5-year government Canadian bonds has fallen sharply since November. Banks use their fixed mortgage rates on government bond yields. So remember the bond rates, how it works is they become attractive when interest rates start going up, and more of a safe haven to put your money. And the bond market's been pretty much dead since we artificially deflated interest rates to historically low levels. And the bond market's been pretty much non-existent until lately when they've been raising rates. And then the yield curve has been going in and out. I suggest to go to Uneducated Economist. He's got a lot of bond yield curves videos on his channels, Uneducated Economist. Check him out. He talks about that a lot. While the fixed rates are getting cheaper, variable rate mortgages have been getting more expensive, narrowing the gap between them. Variable rate mortgages rates fluctuates with movements in the Bank of Canada's overnight lending rate, which is linked to the bank's prime lending rates, but a typical variable rate mortgage rate is affected by the amount of discount banks offer to their prime rate for new clients when they negotiate a new variable rate mortgage. Variable rate mortgages, watch out guys, it's very dangerous, because if interest rates do spike, you're in a heap of problems, guys, because a lot of people are doing prime plus 2, prime plus 1. Be very careful with those guys, because they could come back and nib you in the bud. Some big banks are cutting the amount of discount to prime that they offer preferred clients on new variable rate mortgages, which is pushing variable rate rates higher for new clients. Royal Bank, for example, raised the variable rate mortgage rate by 25 basis points on Wednesday. Mr. McLister said a basis point is 1/100th of a percentage point. Mr. McLister said that the typical spread between the banks and 5-year fixed rates and variable rate mortgages has declined 35 basis points from 104 basis points in November, making variable mortgages less attractive for many home buyers, weighing on the merits of locking in with a fixed-rate mortgages. He said that banks are happy to shift more borrowers into fixed-rate mortgages because they are more profitable for the banks under current conditions. So if you locked in at a good rate back in the day, hold on to it for now until it gets up for negotiation, guys. That's what I have to say. So this is a really good website. It's called Economics Help. I go on it once in a while to kind of understand certain things when I'm not too sure about certain things. Summary is effect of lower interest rates. So you just type this into their search and they give you even books that they could recommend for you. Okay, so here it is. Effect on low interest rates. Now, this is very important, and we've covered this a gazillion times on my channel, but I think I need to come and cover this again because a lot of people are waking up to a crash course in economics and mortgage lending and interest rate hikes and deflationary periods and stagnation periods. So a lot of people are running to this crash course, waking up and wondering what the heck happened to their investment or their asset. Well, here it is. Personally, a lower cost of borrowing is the main thing, but economy-wise, and this is the biggest one we talk about, currency will tend to depreciate. Ever since that announcement was made, I went on Google Finance, and I had a gentleman sitting right next to me here who's building an off-grid home, which we're going to be covering on my channel from scratch before we break ground. I'm going to be the first one to put a shovel in the ground, and we're going to break some land, and he's going to build he's working on building a completely off-grid house on a farm land he bought. So that's a good one, good series that's going to be coming up in the next 5 to 6 months when the weather gets, well, in the springtime we're going to start breaking ground, but we're going to follow me on that. So anyways, let me get to my point here. It's very important, guys, because once the currency starts depreciating, our exports do become more attractive because they are cheaper, but in essence, things will be more expensive to import into the country. And a lot of stores, like my store, I import a lot of stuff in from my store here, my game store. I've been doing this for many years now. And I cut my costs down. I moved into a building that the rent is like nothing, and I keep the city happy, and you know what I'm saying? So, currency will tend to depreciate. Cheap mortgage payments, that's the main reason why RBC lowered rates. And then makes export more competitive, imports more expensive. Oh my god, this thing is like reading my mind. And no, I did not pre-read this, guys. low rate return on savers, low dividend payments. So what happens is, do you remember back in the day when interest rates used to pay you 5% on your mortgage, or no, 5% on your savings account? Save your money, ING Direct, 5%. $1 million bucks? That's $50,000 a year in interest. Woo! That's a lot of cashola per year. You could sit back with $1 million bucks and smoke a nice pipe and relax and watch TV all day. That's what $1 million bucks give you. Back in the day when you were a millionaire, you were the man. Now $1 million bucks doesn't even give you a down payment in a bungalow in Sydney or Vancouver. So low rate savers, low rate dividend payments could cause inflationary pressure on economy. So let's do personal first to keep it simple. Lower the cost of borrowing. Yes, we discussed that, and it's cheaper to borrow, and it's horrible because people are getting the free money they need to, fund their ventures. But a lot of people are using the money to consume. A lot of people aren't using their HELOCs and second mortgages that they do have on some of these to invest in small businesses, and that's a problem because small businesses are seeing a huge decline. And without the middle class going into business and paying their taxes, who's going to fund the public sector? But the public sector jobs now, they just print money and pay them. That's what's happening. Let's continue here. Cheap mortgage payments, low return on savers, and low dividend payments, decline in real value of savings, inflation higher than interest rate. Low interest rates are less profitable for banks, and asset prices could rise, cheap to borrow. So asset prices like houses, cars, all this stuff, fur coats, trips, everybody starts, accumulating these assets. Most of the time, jet skis and snowmobiles and stuff they really don't need, but they can afford to buy it because before they couldn't. But at what cost are they buying it at? Now, economy-wise, this is what's detrimental to Canada. Currency will tend to depreciate, making exports more competitive, imports more expensive, could cause inflationary pressure. In theory, should boost the economic growth, but that is very situational because our current economic growth is built off another bubble from 2007 that we did not rectify here in Canada. Investment likely to be more desirable, of course, and government will see relatively low borrowing cost. So, guys, in a nutshell, we're going the wrong way. I am very scared the way things are hitting. I'm very scared. So here it is. There's the UK base rates. So there's interest rates. There's inflation. Blah blah blah. Everything's going. Pow! And this artificial bubble was created in this area, and pow! Look at it, it's below a percentage. Oh, this is inflationary percentage rate. I'm sorry. Look at that. Pow! See? You see what I'm talking about, guys? This is another yield curve here, and it's nice here that they show this, and they give you mathematical sequences on how when rates get cut, and the diagram that shows the deflationary period and real GDP where it sits at. Guys, I invite everyone to go check out Economics Help. It'll give you a good insight on what's happening, where it's happening. And check out Uneducated Economist because he does touch on this quite a bit. And it's a very good website to give you information on, especially if it's a crash course for a lot of people, because they depended on their banks to be on their side. They depended on brokers to be on their side. They depended on the appraisers to be on their side and thinking they're doing the right thing for them and jumping on a dying, ailing property market. And people that bought in the last year are paying now. The people that bought in the last 2 years are starting to feel the pinch. And the people that bought in the last 5 years by mid-2020 will be feeling the pinch too. Let me know what you guys think in the comments below. Thanks for watching, and don't forget to hit the subscribe button. God bless everybody.